So Patrick, you'll be able to follow along here to see kind of how we go about things in the room, discussing them. Now, I will admit, this one is a little bit more complicated than the normal signal because it involves a roll to it. And I need to make clear that everybody understands that it's, only valid if you already have these positions. Okay. So, let's go to, this is, I think, our third iteration now of our TWLO dissection. Okay, so we currently have short March 22nd 135 call, long March 22nd 140 call, long April 18th 130 call, and short April 18th 135 call, right? Everybody acknowledge that that is correct? Okay, and the net of all this, right now is we basically paid 45 cents for this. Between what we paid for our long spread and what we sold our short spread for as a hedge, we're in for a net debit of 45 cents. Some may be 40 cents, but let's just call it 45 cents. Okay? Everybody on board with this? Even if you're not in the position, are you following what we're doing right now? Perfect. Okay, so what we are trying to accomplish is closing out our short position and rolling it to another short call spread next week to collect dollars to offset our cost of the April spread. Eric, great question. Great question, and let me address that at the end of us doing this. Okay? All right. Everybody following what's up on the board? What we currently have, what we're trying to do, because then I'm going to go into if we are filled, what we would be left with. Okay, if we are filled on the roll, we will then have the following. Short March 29th 136 call. Long March 29th 141 call. Okay, and then still our remaining original April position. So essentially, this is like we've had on, a time spread butterfly. Kind of a broken wing butterfly. It's a mishmash. It's a mutt. This is a mutt of a position, but a great position. If we're able to do this at our price of 60 cents, okay, then we would have a net credit of 15 cents. And you would be locked in 100% to what? To a can, well, yes, 15-cent gain at a minimum, or you can look at it as an absolute no lose. There you go, David. No lose position. And remember, we've already taken off half of our original position. Right? We already took off half of our original position for a 70% winner. Okay. Now, yeah, right, Todd? Let's go back to Eric's question, which was a very valid question of why wouldn't we just take this thing off for, what'd you say it was, Eric, $1.85, $1.90? Right? When our original investment is 45 cents. Massive winner, right? Massive winner. And that is because, at least at this time still, the trend, the momentum for TWLO is decidedly on the upside. Okay? You guys know I am the absolute biggest proponent, and I harp on this day in and day out. Bulls and bears prosper, pigs go to the slaughter. Right? We're not trying to be piggish here, though, folks. What we're trying to do is absolutely maximize our win and minimize any downside on this. So it's not like we're just closing our eyes and trying to hit a home run here. We are doing this extremely strategically. And trying to just maximize a fantastic position that we have. So let's talk about what are the goods and bads that can happen moving forward. Again, let's assume we get filled. Okay? And Rick, you know what? I'm going to give you the golf clap. Nicely done. Nicely done. But let's talk about the good and the bad. If there is a good and a bad, which there are, of what could possibly happen. Okay? Let's first talk about the good and, in an ultimate setting, an ultimate scenario, what we would want the stock to do. Okay? If we end up filling the role, what would we ultimately want to happen to the stock here? Anybody? Okay. Roger, I'll go with that. And at what timing? Okay, Joe. Yep. Okay, so you guys all got it. We always want stock to move to our short strike or strikes in this instance, right? Okay, Jake, you say sooner is better. In the perfect world, we would want the stock to be 136 end of next week. Well, Roger, remember, we're assuming here that we're already closing out of this, or we're getting into the roll, right? So we don't have a 322 position anymore. We're assuming the position on the bottom of the screen here, that we've accomplished the roll. So what we have is a March 29th, April 18th. Yeah, we want the stock to go to our short strike by the expiration of that short strike, which, if we accomplish this roll, would be 136 next week. Because then the new position that we put on, that premium would decrease down towards zero, while our existing long April position would continue to gain in value. Okay? Does this make sense to everybody? Why we're trying to do this? And yes, Eric, we could just exit, take our fantastic profits, and go. But the reason we're not is just because Twilio is still in a very, very bullish trend. Now, if things change, right? If the market turns around, if something happens with Twilio, bam, we'll get out of it, and we'll still take some really, really nice profits out of it. But this is one of those opportunities that I see that we are just trying to absolutely maximize what we can get out of this thing without having that mindset of being a pig. Okay, any questions? When do we have to decide about what, Sam? Sam? Oh. Well, we're trying to get 60 cents. Okay? We're trying to get 60 cents. We'll only get 60 cents if the stock rallies a little bit. Okay? If we don't, we'll either readjust to maybe a different kind of roll, or if the stock starts to really look negative, we'll just exit the entire trade and take a little less profit than we would have gotten right this moment. Okay? Joe, so that's a combination of time and price in the stock. My guess is if we hit 130 and a half, up about $1 from here, we get filled. I don't know why the whiteboard keeps flashing like that. I'm going to have to try and fix that. All right. Okay. Let me post up the whiteboard here in the room. So let me do this right now. Twilio dissection number 3 whiteboard. And then let me get the video going here. I'll get that posted in the room. And I'll be back. Richard, why wouldn't they allow you to do the roll? That doesn't make any sense. Why wouldn't they allow you to do that?